talk about how all of the overnight cues that we just spoke about can impact our own markets and some of the individual stocks that you should have on your radar as well. Our research team is here with the trade setup. Sonal, Mangalam and Surbhi all join me now to prep you up for this trading session. Guys, a very good morning to all of you. Sonal, let me come to you first. We were just going through the global market setup and that definitely is a bit negative.
It is. That's why US markets, they were lower in trade, and this is after the Juneteenth holiday. They came back and the rally has been reversed now. The Dow Jones was down 0.7%, S&P down 0.4%, and that is something that we are seeing in the Asian markets as well. They are lower after the weaker cues that we got from Wall Street. Hang Seng is down 1.4%, so the weakness continues there, and the SGX Nifty is indicating that the start for our own markets, well, that could be in the red, 17 points lower on this one. Now, if we talk about our own markets, the second half recovery actually led to Nifty closing at day's high yesterday, 61 points higher there. And mid-cap index also ended at a record high. It was the 7th consecutive session of gains for mid-cap index as well. IT stocks and Reliance Industry, they led to the gains that we saw on Nifty, and that is something that we'll be tracking as well. So now the resistance for Nifty is at 18,850 to 18,900 and support is at 18,700. Nifty Bank 2 recovered sharply, 421 points from the lows of the day to end at 43,767. Now the 20-day moving average of Nifty Bank is the immediate resistance here, so that is an important level to track. In terms of flows, we had DIs net buying 1,972 crore rupees in cash, and similar amount was sold by the FIIs. So that is something we'll be tracking as well. But for today, looks like it could be a start in the negative.
Okay, a start in the negative, but let's see how things move from there. Sonal, thanks a lot for taking us through all of those cues. Surbhi is also here to take us through all of the individual stocks that we should track ahead of the market open today. Surbhi, take us through the list.
Good morning. So first on my radar is Shriram Finance. Now sources say that Piramal Enterprises is going to sell stake in the company. The next is Pidilite. The company is going to manufacture Litocol and 10x products from Italy in India. HDFC Life is also on my radar because the CCI approves acquisition of additional stake by HDFC in the company to over 50%. Shilpa Medicare, the company is going to consider a fundraise on June 23rd via a rights issue. And lastly, Avenue Supermarts, the VP of Buying and Merchandising has tendered his resignation effective July 1st.
Okay, Surbhi, thanks a lot for taking us through that entire list of stocks. Let's also talk about all of the cues from the futures and options space. Mangalam is here with that. Mangalam, we did get that rally and that recovery pretty much towards the end of the trading session. What should we watch this morning?
Well, it was a remarkable day of trade yesterday. In fact, we opened with a cut. Thereafter, we saw some cuts all the way to the tune of 17,660. And right from the support zone, we saw a big recovery. And the Nifty ended at the high point of trade. A large part of the last hour's rally was also on account of a couple of F&O-related factors. It was the Nifty Bank as well as the Nifty Financial Services. Both those intraday charts come up for you side by side. And you see, there was a big rally. The Nifty Financial Services saw some short covering towards the end as well and ended above 19,500. And as a result of which, we saw the Nifty Bank do well as well. The other thing that really worked for us yesterday was the way the IT index was supporting. So towards the end, we also saw some purchase in large cap IT names. So all those factors took the Nifty once again closer to all-time highs. However, the important part to watch out for now will be the way flows move and how we navigate through the congestion of 18,850 to 18,900. The FIs yesterday sold, the DIIs bought. But remember, this has, this has been impacted by a lot of large trades that took place yesterday. So there were three major large trades: HDFC, AMC, Timken India, and Krishna Medical. So as a result of which, the flows picture has been slightly, confused, or rather, it includes all those large trades itself. So no directions coming in just based on those flows numbers. The FIs bought about 370 crores in index futures. That was more on account of short covering than long addition, and as a result of which, their longs are just at around that 52% mark. In terms of options, because the Nifty recovered from lows, all those guys who had written the 18,800 call had to cover their positions. So we had some call shedding out there, and 18,700 call writers as well were extremely active and unwound their positions because they were caught on the wrong side. But we did get a lot of put writing at 18,800, and that's positive because that's telling you that the Nifty support continues to move higher and continues to stay strong. So the Nifty support range largely between 18,650 to 18,700, congestion 18,850 to 18,900. For the Nifty Bank, 20-day moving average is a bit of a resistance, so that's something that we'll have to watch out for despite the recovery that we saw yesterday. Just a handful of stocks that I'll be keeping an eye out on. Hind Copper and BHEL have entered F&O ban, and out of F&O ban are Manappuram, Tata Chem as well as Z Entertainment Enterprises. So we'll watch out for all those counters.
All right, we will watch out for that. Mangalam, thanks a lot for taking us through all of those cues that you're looking at as well from the futures and options space. But with